All right, welcome everyone. This is Bob Maurer. It is Tuesday, the 5th of November, Election Day. It's around about 3 o'clock my time. I want to do a review of the current seasonal futures spreads strategies, see how things are looking for the ongoing spreads, and also got a handful of new ones to introduce. I am just going to briefly introduce them, and then I will post more videos with a couple of them in each, but introducing all of them. And that'll go into more detail. So for time's sake, I didn't want to go into the detail of all of them because this would be a very long video. So without further ado, let's take a look at the ongoing spreads, see what's news there, and then also, like I said, I'll briefly introduce those new spreads. So hopping into the portal, clicking on the most current PDF version right here, brings this up for the week of 11/3. And this is what we're working with. So 328 through 332 are old news, meaning those are the ones we've been looking at for a while. And then 333 and onward are the new ones I'm introducing, even though some of them, the windows have already started. As you can see, this RBOB number 333 began on 10/27. But we'll bring everybody up to speed. So 328, bear spread, lean hogs. We'll look at that one. If anything's in gray, that means something changed. So I did change the exit price on this one. 329, bear spread in cotton. Changed the stop down to 327. We'll look at that. 331, our wheat spread, bear spread. I changed both the targets and I tightened up the stop. And then 332, I think it was just a few dollars difference, but I thought I'd just throw it in there anyway. The margin requirement changed a little bit on that bear spread in crude. New spread, 333, RBOB unleaded gas. So 332 is a bear spread in energies, crude. All right, 333 is a bear spread in energies, the RBOB unleaded gas. So if you don't mind kind of doubling up in the same sector, and actually you'll be tripling up because wait till I get to the next page, then go for this. Otherwise, if that's a concern for you, you want to stay more diversified, you might look this one off. 334, bear spread in feeder cattle. And then scrolling on down. 335, bear spread in heating oil. So again, there's that other energy complex futures contract. And same story goes with this one. If you don't want to get overly diversified, or if you don't want to get overly loaded in one particular sector, then you might want to look that off also. And then we've got 336 bear spread in corn, 337 bear spread in natty gas. This is an energy complex, but natty gas tends to have its own shining beacons when it comes to things that'll impact that marketplace. Doesn't necessarily correlate with what's going on in the overall energy sector. And then 338 bull spread in cotton. And as you'll notice up here, we are bear spread cotton. This trade ends though in 2 days. Seasonal window ends on Thursday. Friday is a WASDA report, World Egg Supply Demand Situation. So if you want to stick around because you're still leaning bearish and you want to hold this through Thursday and into Friday, that is your prerogative. But the date for the seasonal tendency ends on 11/7, so we'll see where we're at. But that would be my recommendation, is to go ahead and cover this thing on the 7th. And then on the 8th, the next day, the March-July bull spread kicks in. All right, so we are in the May, and then the March-July goes bull. All right. So enough said about that. Let's hop on over to the charts. Take them one by one. Lean hogs. Hog market's been on a really nice uptrend for quite some time, finally taking a break. While it was doing its uptrend, the spread was brought up with it. Not near to the extent as the actual outright futures contracts, but nonetheless still found a bid. And it's been working slowly against us, just grinding higher until yesterday and today where we finally got a break. So I'm going to revise this. Walking it forward, there's only about a week left in this. It ends on the 13th. And walking it forward, I don't think this 117 and negative 150, target 1 and 2 are still in play. Target number 3 definitely not in play. So I want to recommend canceling that one. So this one is going to get canceled, target 3. Okay. And then target 1 and 2, I'm raising. So target 1, negative 117 is coming all the way up to negative 30. All right, which we actually got through or touched today. So we'll see what happens there. And then target 2 is going up to negative 67. All right, so I'm raising targets 1 and 2. And let me just try to make this a little bit clearer. That's what it's going to look like now. Sorry about taking a moment there just to make it look pretty. So that's the 67. Here's the 57. Okay, so it's going to look something like this now. All right. So canceled the original targets 1, 2, and 3. Replaced them with these 2 new targets 1 and 2. Okay. And we'll see what happens. So, like I said, it did touch negative 30 today. It didn't necessarily mean that you're due a fill or anything. So nothing, no opportunity lost there as far as I can tell. And then the second target, if you want to stay with this, hoping it gets a little bit lower, would be negative 67. It would ultimately end up with a bit of about a scratch. Okay, if you get out around negative 30, it'd be about a scratch for the more aggressive average in type traders, and then be a bit of a gain of about $100 for the entry to more conservative entry level traders. All right, so those are the revisions. That's how we're looking. Market's finally breaking a bit, but being that there's only about a week or so of trading days, 1, 2, 3, 4, 5, 6, 7 trading days left. Walking it forward, these are the new targets I would recommend. All right, so that is strategy number 328. Bear spread in lean hogs. All right, then we'll move on to the cotton. All right, so this goes off on the 7th. Okay. And the market did what it's supposed to do, basically. Got a little bump to the upside and then broke. Entry level 2 traders are not in, so obviously that's going to get canceled. I'm going to remove this, move the stop down. So that's the big change here. So the stop right now is negative 263. We're going to bring it all the way down to negative 327 where the entry level 1 traders are in. And I'm canceling this entry level 2, clearly, because we're so deep into it. So that's going to go away. The entry level and stop are now going to be at 327. So tightening up the stop to negative 327. So worst case scenario, if you get filled there, it'd be on a gross basis, hopefully a break even for you. But hopefully what happens in the next couple of days is this thing finds some new weakness, pushes on down, and hopefully you can gain a little bit more out of this thing. So I'm going to keep these targets where they're at. Obviously, I don't think target 2 is going to be viable. Never know. Maybe 434 would come into play, but we'll need a big dip tomorrow. And you'd have to stay on board through Thursday, too, if it's another day of weakness in order to get that negative 434. So it's probably going to be where you just cover right on the last day of the window. All right, so that's strategy number 329. Just tightened up the stop, canceled that entry level 2, and things are looking pretty good there. So let's hope it just stays on the lower end here. So that is 329 cotton bear spread. All right, then we got wheat. All right, so strongly sideways is how we went into this window. Strongly sideways is how we're staying in this window because it just doesn't seem to be budging much one way or the other. You can see this big rectangle. If I stretch it, we're basically still right in there. So very range-bound trade. Few tweaks here, okay, similar to that first one that we did. Number 1 is I'm going to cancel the second entry level of negative 4 cents. All right, so that is gone. I'm going to drop the stop from negative 1 1/4 down to negative 3. So that has changed. And then target 3, I'm going to outright cancel because that does not seem viable at all anymore based on me walking this forward. Target 1, I'm raising to 7.25, negative 7.25 that is. And at target 2, I'm raising to negative 8.5. Whoops. Negative 8.5. All right, so this is the way this now looks. So tighten the stop, tighten the targets, walking this forward, just don't look viable anymore in terms of those numbers on underneath there. And we just need this thing to break. I mean, it's been solidly in this really tight range, as you can see here. Currently, the only ones who are in are entry level 1 traders, which would be negative 6.25, or better if you had held on and tried to get something a little bit higher. So really, technically, if you got in at negative 6.25, you're sitting with some very modest level of unrealized loss, and at best, you're going to make a penny or two. So it wasn't quite the risk reward as it had started out, but nonetheless, it is what it is. And the market just needs to break over the next few days. And again, we do have a big report out on Friday, or the monthly report, the WASD report, and maybe that'll be the catalyst that helps push this down. But if it's a catalyst that helps push it up, I want to tighten that stop so we're not risking as much. Okay, so a few changes there: tighten up the stop, tighten up the targets, and we'll just have to wait and see what happens here. Hopefully, we get some weakness in this thing and it pushes on down and at least gets us to negative 7.25. All right, so that is the wheat. Okay, next one is crude oil. Number 332. We're looking to get in at 36 and 40. Today's high is 36, so touched it, but not necessarily guaranteed to fill. So we won't lock in the fill yet, and I hadn't seen the fill come across. So no fill as of yet, no change to the strategy. We are looking for a bit more strength to get us in at level 1. Then we need to see get through this 200-day moving average here, this white line, so we can get filled at 47. Stop is at 70, then we're at targets underneath. So we need this thing to pop up a little bit and then rotate back down. And as you can see, generally speaking, market's in pretty much a range-bound trade of anywhere, say, high end to be in the 50s, low end somewhere in the low 20s to maybe the teens, and we've been in that since roughly around the early part of June. So trend trade, but also the driver's seat. In the driver's seat is the seasonal tendency, and it's also bearish. So we just need to see a bit of a lift and then a break, and no fill as of yet, and no change to the strategy. All right, so those are the ongoing spreads we've been looking at for some time. Those 4, as you can look on the sheet, and you can just review this video. Plenty of tweaks there in terms of raising the targets or dropping the stops. So get on your platforms, call your trade desks, or call your broker, and go ahead and get those modifications done if you so choose. So now we're getting to new spreads. I'm just going to go through these really quick. This is RBOB. Strategy number 333, long to May, short the Feb contract, margin requirement 1120. We're looking for a bit of strength and then a rotation back to the downside. Okay, it's just like the crude oil. Looking for more of a range-bound trade, but in the driver's seat is the seasonal, so we just need this thing to push on up, test the high end of the range, and then rotate back down and hopefully get our fill. So that is the unleaded gas bear spread. Strategy number 333. 334 is feeder cattle. And this only has one entry level, all right, and that's 272. So we need to push to the upside and then a break. I wouldn't say this is necessarily range bound. This one had a tremendous rally as cattle really started screaming to the upside. These two markets moved together. Then it had a pretty decent break here, and now we're seeing another bounce. So I would say this is more so consolidation, a bit of an unwinding of this massive move that we saw earlier. So we just need to see this thing to pop up a little bit and then break on down. The strategy number is 334. It's a feeder cattle bear spread, long March, short January. feeder contracts. All right, and the margin requirement just shy of about $1,000. So that's 334. 335 is heating oil. And similar to that crude and the RBOB unleaded gas, we want to see a rally and then a break. So this is strategy number 335. The heating oil bear spread, long July, short February contract, margin requirement just a little over $1,300. We are looking to sell this thing. We want the market to rally and then break. Our entry levels are 347 and 473. And the targets are down there at 64. And then you see target 2 and target 3. This is benchmark is 176. That was done back on the 30th when this seasonal window started. So we're going to see this high taken out. Might have already seen it. So that high was 329. Yeah, we got a 3. So we took it up by about 3 points. So basically, we want to see this high taken out like we did today, push up a little bit and then fail. All right, or ideally push up to 473 and then fail. All right. Those are just the basics for this one right now. 335 bear spread heating oil. Then we got a grain here. We got corn. And similar to the one we just did with the heating oil, is only one entry level. So we're looking to get short. It is a bear spread. It's number 336. Long July, short May. Margin requirement just shy of $200 per spread. The entry level to get in is negative 3.5. Stops at negative 2, and then our targets are down here below. This thing we want it to grind up a little bit and then fail. So the market's been on a bit of an uptrend. So this is, we're going to call it a counter trend. Okay, it's been on an uptrend since mid-July, which is kind of ground higher, and got up to this high here on the 24th of negative 3.25. So we want just to barely attest to that, and then this thing to fail. Push on down to the negative 6.25 level. So we're going to call it counter trend. Seasonal tendency number 336, bear spread in corn. Then we've got nat gas. Now this one has not started. This begins on the 6th, which will be tomorrow. So we've got to wait for tomorrow's close. We're going to get the benchmark. And then from that, we're going to add or subtract points to either get our entry levels or targets. It's a bear spread, so strategy number 337 in natty gas, long the March, short the February contract, margin requirement 523. So we want this thing to basically, there's been a real nice downtrend, and that's what we want to see continue. It's not topped off here, but even back in mid-June, it was as high as, say, 450 points, and then it ground down to the swing low here just yesterday of 204. So broke about 50% of the original value there back in July. And we just want this thing to continue to push on lower. So sell a bit of a bounce, break on down into new lows. So this is a trend following seasonal tendency. All right. Nat gas bear spread number 337. And then last but not least, this one also has not started. This is the bull spread in cotton. So we're here in yellow, number 338, cotton number 2, that's the world price. Bull spread, long March, short July, margin requirement about $650. And we want this market to basically break on down, allow us in, and then rotate back up to the upside. So it is counter trend. It is counter trend, all right? Because the market's been on a pretty good move to the downside over the last 6 weeks or so. And our levels are going to be, well, we're going to wait for the close on the 8th, which would be Friday. So we're going to start trading this come Monday morning. So we'll wait for Friday's close. That'll be our benchmark, and then we're going to add or subtract points in order to determine our entries and exit levels. All right. So that is number 338 in cotton. All right, so that brings us up to speed. There's lots to talk about. Like I said, I'm going to break down those new strategies, probably do a couple at a time in some videos to kind of give you the backstory, give you the rationale for why I published it, go over a little more details. And you can look forward to those. But in the meantime, for the ongoing spreads, I tweaked a number of them in terms of either dropping the stop or raising the targets. All right. So if you have any questions, comments, anything of interest, feel free to let me know. I'm going to leave it there, and thanks so much for watching.